All right, good evening, everyone. As you can see, the chart that we are going to be breaking down today for you is gold. Micro gold futures is something that we had a short couple of days ago. I do believe this was November 11th. Today is November 14th, so this was a trade that I took a couple of days ago. I just got the time to, upload a video of the recording. At the time, this was all muted. This was me recording after having the video completed. So as you can see on your screen, the first two arrows that you can see on top there was me taking profits from one of the previous shorts that I had. So gold has been on a downtrend ever since Trump won the elections. It's because of the dollar index gaining strength, right? The DXY. It's the index that dictates what the overall strength of the dollar is against multiple multiple currencies like the Japanese yen, Swiss franc, and there are a couple of others as well. So the dollar index soared, which led to gold. You can say, I wouldn't say tanking. I would say it's still a healthy pullback, right? Gold that was in 2000, went almost to 3,000. And now we're at 2,635, right? As of today, we're at around 2,530. So we dropped significantly even after that. So since we were on a downtrend, I was having a short pre-market. There was good volume, so I took a little bit. I took like little contracts and went short. Now, what you can see that I'm currently in is another short that I took once the market opened. This was also pre-market, as you can see at 9 o'clock. There was good volume. We broke a certain level, and I went short. I think I went short around 4 contracts of micro gold. That being said, as soon as we broke a certain level, I took one off, and then I took the other two at 2650 and 2640 because those are potential areas of gold, potential areas of it bouncing basically. I have one runner left at this moment. As you can see, the volume is picking up. We have 1K. It's not as much as volume as you saw earlier, but you can see there is volume, and there is also significant price movement with volume. So that means that confirms that the trend is still down because of the volume that you can see picking up there. Now, my target that you could see down there, haven't rolled it at 2620. We're going to be breaking this particular level very soon, and we're just going to be flushing right now. This is exactly what happened a couple of years ago when Trump was elected the first time, right? When Trump was elected the first time, market soared, gold tanked. It's the same repeat. It's the same cycle. Now Trump is again president. Even though there is a lot of economic instability globally, you could still realize the effect that that the U.S. has on the overall market, right? Until the elections, there was a lot of instability. There was a lot of uncertainty that was with the market. But once the elections happened, and once Trump won, we came to a realization that a lot of things are going to be changing. The dollar gained strength. We don't know if it's a momentary strength or a moment, if all of this is momentarily, happening. I don't know. But what we can do is we can trade with the present information that we have. That's the only thing that we can do, right? So based off of that, dollar index is up. If the dollar is high, that means gold would come down, right? Because gold is hedged to USD, so it's like negatively correlated between the two pairs. That being said, as you can see now, we're at 2633.6. I still have one contract left. It's just something that you just hold for up until up until I realized that there's a significant bounce up until we reach a certain level. This is a trade that I would just continue holding, for as long as it's selling, as long as you're in profits, you just hold this until you reach a certain level where you realize, okay, there is a potential bounce. Anything can happen scenario. You can bounce, go right back up. You can bounce, continue dropping down. So exactly as a lot of other traders say, you cannot always catch the entire move. It's not about catching bottoms or tops. You just play the ranges in between and exploit the move, right? That's what trading is. Those are the trades that you have definite risk to reward. Now, in this particular trade, as you can see, my stops were above 26.63. They were at 26.67. I would say I wouldn't even give it that much, right? This is me just placing a stop there because I know where my stops are. My stops would be when, okay, and I'm showing my profits right now. As you can see, it's $322. I was up around $600 the entire overall, and then plus the 300. So we were banking pre-market, and we were also banking once the market opened. Now again, coming back to what I was saying, my stops for this would actually not be 26.37, which it's a given stop. It's a stop that you could actually say, okay, fine, I don't mind having that type of a stop. However, for me, if I didn't see that right type of action at the time, that was a short, that level right there was an area where you could bounce, right? And since it's an area that you could bounce, since it's a place that has a potential of bouncing, certainly, if I see that type of action and I see the type of volume that would come in, that would make my trade either, I wouldn't be willing to hold it even till 26.67. So it depends on the type of trade that you would have at the given time as to how much of a risk you'll be willing to place. It's a concept that you would understand once you trade, once you continuously trade multiple times, for multiple sessions, right? You'll understand there are different types of trades that you place. There are some that you place with small shares. There's some that you place with, large shares. Some people call it impulse trading. It's where you just get in once you realize that a certain level has been broken, right? And then again, the same thing comes into play is how much risk are you willing to take? So all of these factors, would play when you're trading. So as you can see, price is now at 26.31. As you can see, the volume has increased. Where we were earlier, we were at 1.2. Now we're at 2.9. As you can see, the volume, all those bars are close to that. So that confirms that there is selling, right? There is selling that is coming into play. You have 3K volume. Price hasn't moved. Now, since we're coming down to the level, right? You could interpret this in multiple ways. The way I see it is, exactly, I will be holding this until the level clears itself. Until that happens is where I will be holding this trade. So going back to the dollar index, I'm not showing the chart right now, but that being said, if you were to look at the chart at this moment in time, closer to like 10 o'clock, you would realize that the dollar index was pushing up. Now, 10 o'clock for a lot of traders is something. There is a trade that we call the reversal trade that does happen at 10. A lot of traders in different floors that I know would take this trade, right? Like it's called a reversal trade. If it's a certain level that they like, they'll place their orders below that. They'll place their stops below that, and just risk whatever the risk is, whether it's $100, $1,000, depending on the risk, and then they'll just take the trade, right? That's called the reverse. That's called the 10 a.m. reversal trade. So I do believe this was around that time. However, since I have been shorting this from 67s and now we're at 31s, that's a significant move, right? If this was something that I was trading on my other account, which would be on the actual gold, this is bank, right? This is a lot of money. So depending on the trade that I was, depending on the account that I was trading, for this account, I was only allowed to trade micro gold, right? Because the risk for this account is only for micro gold. That being said, like I said, like it depends on the risk that you're willing to take. It depends on the amount of money you're willing to risk when it comes to trading. Over the past couple of years, what I've realized is this game that we call trading, right? You can see we're still up, $335. Again, this game called trading is something that's it's very tricky, right? Like there's a lot of things that go into trading apart from the fact that, making money. Making money is something that comes in a later time. Being disciplined, getting your emotions straight, a lot of external factors that would affect your trading. You need to be able to put all of that aside, right? And because we're humans, it's very difficult for us to put those emotions aside. That's where algorithmic trading comes into play, but that's a different topic. I do a little bit of algorithmic trading, however, not in such a way that I have mastered my, algos yet. No. So, like I said, it all depends on the way you approach the markets. It depends on your mental state at the time you approach the markets. It depends on how you react to certain events that happen when you're in the trade, when you're out of the trade, your emotions as you get into the trade. There are a lot of things that affect traders, right? You should be able to isolate events, and then only would you be able to be successful. So that being said, 26.29, 26.28 is where the market is at right now on this trade. Today, we had Fed Powell speak today. The market didn't do much. We didn't have any significant moves. Powell said that the economy is, resilient as usual. He said that Trump winning doesn't make any much difference until 2026 or 2027. That being said, thank you for watching. Have a good evening.